are. Hey there! Don't go buy your next house without watching this video. It's vitally important, and we're going to get into it right now. Hi, I'm
Right
Sheila.
now. Right now. Sorry, I didn't
Right,
even cut you off.
you did.
My
No, you
lines. My
my
lines.
lines, my
I
lines.
can't remember my lines.
If
Welcome to
you've
the
ever
zoo.
watched the if you've ever watched the Detroit Zoo video from way back in the 80s, you know what we're talking about. But
Yeah.
actually, what we're getting get into right now is interest rates, and it's really important that you know exactly what Mike's going to talk about today because, well, the advertising that you see online for interest rates aren't exactly what they seem to be. So Mike's going to get into that right now. So let's get started. I'm going to bring up a slide just to kind of touch on always what we're going to talk about. And it's right there. What is par rate? What does it mean to buy down a rate, pay discount points? And then what does it mean when they say no closing cost package? We may hit that last one, we may not. But Mike's going to go over really kind of the things that happen when you look at that advertisement online. So, Mike, go ahead, take it away.
All right. I have to forewarn. This is probably one of the topics I am the most passionate about. So I'm going to try not to get too excited, get too loud as I'm talking. But this is just very, very important to me. I feel every consumer should have this knowledge, should understand interest rates, understand the nonsense that is being advertised, what's legal, what's not legal, and why it matters to them, because it's a pure, in many cases, bait and switch. Bait and switch. We tell you something great, something shiny, just to get you into the system, and then we're going to hit you with reality later. And when you're talking about homes and mortgages, who needs that? Nobody needs that. But I want to go over and show. I'm gonna pull up some 3 different sites from 3 different banks. This is public information. I'm not calling these banks out. They're advertising of their rates and the way they have them posted. It's legal, but I know what to look for because I'm a mortgage person. Consumers don't know they don't understand what's a loan, what's a interest rate disclosure. What does that mean? What is this link? They don't click around. They don't know what to look for. So I want to show people what is happening in with when you look up rates online with banks, and then I want to get into and show a rate table and talk a little bit about that. But the first
All
thing I
right.
want to do is I am going to share my screen. There's my doggy dog. That's not the screen we're sharing. We are going to share this screen here. Okay, can you see this screen here?
Yes, we can.
All right. So, and then Sheila, you are sitting over here. I'm going to move you over to this screen just so you're still with me. All right.
All right.
Now you're way over there. Okay.
Hello.
Hello.
All
So,
right.
I've got a few bank websites here, and again, this isn't a knock on these lenders. They're putting rates out there right on their website. You don't have to have an account with them. But I just want to show a couple of things. So right now, if you go to this lender's website, they have the rates posted right there. You can click on the page to see what are the mortgage rates today. And when you go down here, you see 30-year fixed, and they have a rate here of 6.99%. Now, one of the things I want to talk about real quick before we get into this is do you have the slide with the do you have the slide with the 7 factors that determine a credit score or determine an interest rate?
No, I don't. Is that on the presentation that you had?
Yep, that is actually in the presentation. Let me pull
All
that up.
right.
Okay, let me
Yep.
show this real quick. I should start here. I'll go back and then I'll come back. But first of all, there's 7 main factors that go into determining what interest rate any individual borrower will qualify for. So you could have 2 borrowers.
There's that word again.
I know that it's terrible. Borrower, you could have multiple borrowers buying roughly the same priced home, but they can all qualify for different interest rates. Credit scores obviously is one of the biggest determining factors. The lower the score, typically the higher the rate you're going to qualify for. But there's things like home location based on what state that home is in, or even geography of homes. There's certain programs that will be for certain homes in certain cities to promote either people moving away from certain cities or moving into certain cities. So that's just another factor that's out there. Home price, you're probably going to get a little lower interest rate the more pricier the home is, because it's a larger loan. So lenders will charge a little less interest because they're still going to make more interest dollars on a higher loan amount than a lower loan amount. I'd rather make 1% of $1 million than 10% of 100,000. So you're going to get a lower rate on a higher priced home in most cases. And then the loan amount, how much money are you putting down? The rates will be a little bit different, whether you're putting down 3%, which is the minimum you could do on conventional, or you're going the full 20%. Sometimes if you're putting 20%, you think you would get the better rate. But if you put down just 19%, which triggers a small amount of private mortgage insurance, you could get a better interest rate than the 20% down, because it's considered a slightly safer loan because it has some mortgage insurance backing it. So there's all kinds of these little behind the scenes factors. Loan term, is it a 15-year, a 20-year, a 21-year, a 30-year? They're going to have different rates, and you'll see an example of that shortly. Type of interest rate, is it a fixed rate, which most people take out, or is it a variable rate like an ARM? You're going to have, in most cases, a lower rate if it's variable, but there's pros and cons to that. And then the loan type, is it a straight conventional loan? Is it a bank statement loan, which is going to be a higher interest rate? Is an FHA, which would be a lower interest rate? All of these things go into determining what one individual borrower is going to qualify for.
Wow.
So we need to know that there's a lot of factors involved. It's not just what's my score, what's my rate. It's not that simple.
Wow.
So I want to go over here now. Rocket's page, 30-year fix. They're advertising this right on their page. This isn't private information. They're advertising a 6.99, which in some cases sounds like about where the rates are at right now. But if you look right here, I will credit Rocket for not hiding it, because they have right here, for this rate on this day that they have this on their website, which is today, you're going to pay 1.875% in points, or $5,100 just in discount point fees to be able to get that 6.99. So this doesn't mean
so that's points on top of your down payment, right?
On top of your down payment, your closing loan costs,
and your closing costs. So your closing costs, then your down payment, and then this additional 5,100.
Correct. So if your total closing costs were $7,000 and you went with this, you'd be paying $12,156.25 for closing costs. Because that's just pure dollars. You are buying a lower interest rate, which means you're not qualifying for a 6.99. You might be qualifying for, who knows, a 7 3/4 or a 7.5. But if you pay all this money here, you can get that 6.99. So the bottom line here is you're
paying for the good rate. You're paying for your rate.
You're paying for a lower rate. This is not a par rate. A par rate is an interest rate that has no cost to it. That's a par rate, an even rate, just like golf. Gotcha. Par is even. Okay. This is not a par rate. The par rate is actually somewhere up in the sevens. But if you want to pay $5,100, you can get this rate. Okay. At least Rocket puts it right there in front of you, which I applaud them for that. Okay. Yeah. This is another bank, and they have a place where you can go and look at rates. Okay. And they have the 30-year fix right here showing a 7.425%. But what you don't know, and you're probably not going to click on, is this show more. And down here, they have some information here. Standard purchase, $300,000. Borrower, they're taking out $270,000, which means they're putting $30,000 down, which is a 10% down payment. And with that, they're showing the 7.425. But is that a par rate or is it not? We don't know. Well, what most people won't do, because they don't know to look for these things, is if you go here to advanced search, which is hidden, you come down here, you see, okay, it's for a single family residence. If this was a condo, that rate might be different. You see that it's a primary residence, which most people are looking for a primary residence, not investments or anything. And they're always going to put the highest, best possible credit score that you can have, which is 740 or above. But right here is what's interesting is it's has these settings here, nearest to zero under points. Well, nearest to zero would be anywhere from 0 points up to really 0.49 or a half a point, because once you get to 0.51, you're nearer to 1 than you are to 0.
Right.
Correct?
Yep.
So if I change this to nearest to 1 and I do update my purchase rates, which actually it's nearest to 1 is what the site defaults to. Before I went in here before our call and changed it to nearest to 0. It
Okay.
defaults to nearest to 1, which means nearest to 1 could be anywhere from 0.51 up to 1.49 in points.
Mm,
So that interest rate looks good, right? 6.915.
sure.
That looks pretty good, but we know that it's set at nearest to 1. So you could be paying, let's say on average, 1%. 1% is going to be 1% of the loan amount. That's about $2,700, give or take, based on this nearest to. Who knows how to define that? So if you set this as lowest as possible, nearest to 0, that's where it updates, and it went up to that 7 point whatever it was, 7.4.
So basically nearest to 0 is par, and then 1% is you're going to pay like a 1 percentage point, right?
Right. That could be par. That might not be par, because nearest to 0 does not equal 0.
I
0
gotcha.
points would be 0 points, which is par. Either
Okay.
way, they're up at this 7.425 at nearest to 0. So this is something that's hidden. People don't know to look for this. They don't understand what this means anyway.
Well, and they're not
So
showing exactly the price, right? Like on the other site that we were looking at, they showed the
cor-
price, right?
right, nowhere in
For
here
for the
is the
points.
price.
For
Correct.
the points, right?
Yep.
Okay. Which I
The
think
points.
I think overall, I think all these sites should put that on there because that's super helpful for people, right? And understanding what exactly they're going to pay if they pick that percentage point. Obviously, there's more to factor in, but that is a helpful thing.
Right. And as the rates move around every day. Every business day the
Mhm.
rates change. So let's say today with Rocket, for example, let's say the 6.99 at this point in time was going to cost $5,100. Well, if the rates get a little bit better during the day, you could still get that 6.99, but maybe the cost goes down to $4,200. That means the
Mm,
rates got better.
gotcha.
Okay. If the rates get worse or deteriorate, maybe the cost on this goes up to $5,800 for that same rate. So when the rates are going up and down, what really is happening is the cost for those rates goes up and down.
Gotcha.
You can still get the same rate, but the cost might change. The last one I
Gotcha.
want to show you here is Chase, and they have, they're showing right here, they're showing a 30-year fixed. And if you go down here and you go to their mortgage calculator and you say, click on to get more information, they're showing a 30-year fix. They have a 6.75 here, but look over here, $3,400 in points. Nobody is putting out a par rate. Nobody is. Nobody that advertises a rate is showing a par rate as the starting point, because they would look astronomical compared to what consumers are expecting.
So in other words, they're always going to be putting out this much better looking rate in order to kind of like the thought behind it is in advertising, right? Is to put out a higher rate so that it could or a better rate so that it shows well, right? But in the long run, it's going to cost you money to pay that higher rate. Where if they put the par
Right.
rate, that percentage would look like every other percentage across the board at other mortgage companies, right?
That's why they call it trigger advertising, because it triggers you when you see what looks like a really, really low rate. It triggers you to call them, and it's bait and switch, and it's illegal. Now, you have to have the disclosures online when you advertise a specific rate. And I'm going to show you a great example of that. But again, here's a blank slate. Obviously, the best credit, primary home, single family. If I put in just a couple pieces of information here, 300,000, we're going to do a $30,000 down payment again. So 10%, get your loan options. And, here it's showing a 6.625 on that scenario, which looks like, a pretty competitive rate right now in the market, but it's going to cost $2,800 in points. So at least they're being a little more transparent about the points. But here is what I really want to show everybody to kind of wrap this up. I went over the 7 factors that goes into determining what interest rate somebody qualifies for.
Mm-hmm.
Here is an ad that is on Facebook right now. Right now, today, I took these screenshots. This is a sponsored ad. Anytime you see the word sponsored, somebody's paying to put that ad in front of you. And look at these numbers. We were just on 3 big banks' websites. And even with all of those points, they're trying to advertise a rate in the 6s. Look at these rates. 5.2, 4.9. Click here to get a quote. And they get a lot of clicks. Look at this. A lot of people know what they're onto, and they laugh when they reply. There's a lot of laughs and like, yeah, you guys are full of it. 69 people shared this. I mean, and there's thousands of comments on these ads. But here's what happens. You click on the ad. So all you do is you press on it just to get more information. And it's going to show you this. Hey, 4.9, 5.2. This looks great. But if you scroll down, you're going to see a little thing here it's a link, and it says advertising and licensing disclosures. By law, this has to be here to be able to put an exact interest rate on any advertisement. And this goes for real estate agents too. I can't tell you how many times I've heard that mortgage brokers or mortgage lenders will send to all the real estate agent partners, hey, here's where all the rates are at today. The real estate agent takes that and posts it all over Facebook. Hey, the 30 years at a 6.8. That is so illegal. And the fines are massive. I can't do it as a mortgage broker. You can't do it as a real estate agent. But they do it because they don't realize it's against the law. You have to have the disclosures. Now, here's where it gets really funny. Are you ready?
Yep.
Click on the disclosure. How do I get that 5.1 or that 4.9? Here's what comes up. Well, first of all, it's got to be a 15-year mortgage. That discounts most of the people in the country right now.
Right.
Rates as low as, which you caught that earlier, rates as low as 4.9. But then look at here. This is what I mean by disclosure. The loan amount can be no less than $460,000 based on an LTV of 75, a loan to value, which means you have to buy a house of $600,000 or more and put $140,000 in cash down. That eliminates about 90.
Who has that?
I don't know. And to kick you in the gut a little further, you're still going to pay 10 more thousand in discount points. What's the point?
On top of your 100,000 you're bringing, you have 10,000 in points that you have to pay, and your closing costs.
Another 10 grand in closing costs. Yes. This puts 98% of the buyers in the country out of the race. But that rate sure looked good, didn't it? If you go and you say, well, I can't do a 15-year, what about a 30-year? Well, hey, I can get a 6.1 on a 30-year. That sounds like a pretty good rate right now.
As low as.
As low as. But it has to be a $700,000 home, and you have to put $175,000 down for a base loan amount of no more than $525,000. And, oh, by the way, give me another $12,000 in points and fees to buy that rate.
That's insane.
This is infuriating.
It is. It's so frustrating because, anyways, it's just frustrating because if you are completely honest with people, yeah, they're not going to see the great rate, but at least if you're honest, they're going to want to work with you. You know what I mean? They're going to want to continue to work with you, and they're not going to feel like they were taken advantage of by getting this one thing and then saying something totally different, right?
Right.
So, yeah.
Right. So, as far as I'm concerned, I feel everybody should work with mortgage brokers. Personally, it's just me. I maybe because I'm a mortgage broker, but here is an example of an interest rate table. This is an example. This is not. I'm not saying these are the rates today's. No, this is just example purposes. Okay, this is just a snapshot from a long time ago. But I want people to see that basically, if you qualify for the mortgage, and unless the interest rate and the payment maxes you out at the very high end of what you qualify for, as long as you qualify for the mortgage, you pretty much qualify for virtually any one of these interest rates. But the question is, what's the cost to get the rate? So in this example, this shows an example of a par rate being a 6.381. Par rate, because this is highlighted, and what you see here, final price is $0, dollar amount $0. You're not paying any money to get this interest rate in this example. And your principal and interest payment on that loan would be this amount. The loan amount and everything is all part of this, the false, the scenario here. So you have a par rate right here. Now, if you said in this situation, psychologically, I just would feel really much better if I was just anywhere below 6%. No problem. If you qualify for this at this rate right here, your par rate, you can have any one of these rates. You can have all of them, any one of them you want. But what does it cost? So the 5.999 is going to cost you a little over 1% in discount points, or $4,400.
And not to mention, like you were saying before, this is only part of it, right? Because you have to qualify for it.
You have to qualify for the loan, but as long as you've qualified, you can get any rate lower than the rate you qualified for. Now, most people right now they're not maxing out because the rates are higher than they have been in a while. So people are qualifying what they can qualify for, but how much they want their house payment to actually be is two different things.
Correct. And
So
that's something we haven't touched on. I think we might have touched on in like 3-4 videos back, but making sure that you have your house payment set at an affordable price. Like anybody can be pre-approved at a certain price, but then when you factor in these interest rates and you may end up in a position where your house payment is too high. So,
right.
Buying down the rate might be beneficial if you have the money for it. Right. So,
yep. And you know what? We can really illustrate that and also touch on that third point about what does it mean? How could I get a no closing cost deal? Let's say this buyer here qualifies for up to a $3,000 a month principal and interest mortgage payment. Now, obviously, you have taxes and insurance and things like that, but just to keep the conversation simple, let's say this person qualifies for a $3,000 a month mortgage payment, and their rate they're coming in at is here, which is a principal and interest of $2,653. Well, they can qualify and afford any of these payments. Why would they go with a higher rate? But if they wanted to not pay any closing costs, and let's say closing costs, just as in this example, let's say the closing costs were going to be $2,300. This person could opt for a 6.75, which gives them a lender credit of $2,300. There's credit because it's a higher rate than what you actually qualify for. You could take that credit and apply it to pay a portion of your closing costs.
Interesting.
If it's a high enough credit, you could wipe out all your closing costs. You could go into a 6.875 or a 6.9 and pretty much cover almost your entire closing cost package. It'd be covered by the lender credit, but you're going into over a half a point higher in an interest rate. In the long run, it's going to cost you far more than the few $1,000s you're saving just to avoid bringing those closing costs to the table.
But potentially, if you don't have the closing costs at the moment, you could do that, correct?
Absolutely, 100%.
Okay.
If you needed some help on the closing costs, and this is much more relevant when we're in an environment where the rates are what we would call, I guess, normal, the 4 to 5% range.
Right.
Then you might say, yeah, instead of giving me a 5, give me a 5.5 with a few $1,000s of credit so I can pay so I can fund that escrow account or something.
Well,
That can be
and then
done.
when they so if they get if they do the higher interest rate and they get their closing costs paid for, when can they refinance that? Because, always you can, you don't have to stay at your same rate unless you do a fixed rate, right? But when could they potentially do a refinance?
You refinance it when it's the right time to refinance it. You refinance when the rates have gone low enough that it makes sense to go through a refi, and the investment in the refi is going to pay off down the road by getting into that lower rate.
Mhm.
Most lenders and brokers and the wholesale lenders that brokers work with require that the borrower holds on to that loan for at least 6 mortgage payments
Okay.
before they consider it an early payoff. They don't penalize the borrower; they penalize us, the person that did the loan for them.
I
In
got you.
many cases, they'll take all the commissions that we earn for doing the job that we did. They'll take it back if you do an early payoff or an EPO. So we ask that you at least hold the note for 6 months. Well, I should say 6 payments. That in most cases, that's going to be about 7 months.
Right.
Um, but as far as when is the right time to refinance? It's when the rate is low enough to save you enough that the investment in the refinance makes sense.
Gotcha. Gotcha. Okay.
But if you're dealing with somebody ethical, they're going to tell you what your par rate is that you qualify for. And here's the last thing to wrap this up. Some lenders out there, they put more training into their loan officers into salesmanship than they do into actual knowledge of mortgage products.
Mhm.
It's all about sales. And what a slick salesperson is going to do is they're going to make you an offer. They want to come across and sound like they have the best rate in the market. So let's say in this market the rates are at 6.25 to 6.3. I want to look like a hero. I'm going to say, Mr. Borrower, look, I can get you into 5.99 today. I'm going to get you into 5.99. Your closing costs, they're not going to tell you, hey, there's points and there's fees. They're simply going to say, your closing costs are going to be about eight to $9,000 complete. We're going to wrap, maybe this is a refi cash out. You're not going to have to bring any money to the table. And they'll say things like, we're going to cover that for you. That's misleading. And they say it all the time. We're going to cover that for you. Cover that for you. All that means is they're baking it into your mortgage. When you're refinancing, they're going to finance this. So when they say, look, your closing costs are about, $8,500, we're going to wipe out all your debts. You're not going to have to bring anything to closing. And this is an amazing deal that's going to free up $500 a month for you. That's how they sell it. They've not mentioned one time that you're paying $4,000 in points for that rate. They bundle it all together and start selling you on the emotional things you're going to accomplish. You're going to pay everything off. You're going to increase your cash flow. You're going to have a new loan, and you're going to be so much better financially. Not bring a penny to the table. I've got it covered for you, Mr. Buyer.
But they just added money to your mortgage, the 4,000 or 5,000 or whatever the cost would have been. They just
Yes,
added that to your mortgage, right?
they've added that 4,000 plus the other 4 to 5 in closing costs. That's where they're at $8,000 to $9,000 now. But they just package it all together and make it sound like an amazing deal. And they do not get into any of this detail with you.
That's
So
really unfortunate.
it is unfortunate. With all my clients, we look when we're ready to lock a rate, we look at the rate table, we look at what the par rate is, and we look at the costs to buy down to certain rates. A lot of times it's not this drastic. A lot of times it might be, a couple hundred here, 600, 1,000, 1,200. It depends on the loan size, but a lot of times on the lower loan amounts, these increments are not that big apart. So maybe it doesn't make sense to spend a couple $1,000s to drop your rate by a half a point.
Right.
Well, we do the math. How long will it take you to recoup that couple $1,000 investment? Sometimes it's only $500, but you can drop your rate by 3/8 of a point. Well, for
Right.
$500, if I tell them, look, you're going to recoup that in 6 months. And then after that, you're saving interest every month. Does that $500 investment make sense?
Right. I mean,
You
ultimately,
you need to
w
be told that, though. You need to understand before you make
exactly.
that decision.
Exactly. And the thing is, um, we keep going back to this whole education piece, and this is why that Mike and I always are harping on education because we're looking at your benefit long term. We could be like everybody else and just get you into a house. Like get you into a mortgage, get you into a house, not care about your long-term financial security. And you know, that could be us. But we're not like that. What we do is we look at what is best for you, and we take all that knowledge that you give us, all that information that you give us, and we look at all of this. We look at the rates. We look at what your mortgage payment will be. All of that information is vitally important so that we can make sure that long term you're going to be able to stay in that house, because anybody can put you in a house, but can you stay in that house, right?
Right.
So, yeah, I just wish more people would educate people out there, first time home buyers especially, about the underlying things that they don't see, right? Everybody looks at the shiny object and they want this shiny object, but they don't realize the magnitude of what that cost is. So I just I get so frustrated because it happens in both the real estate side and the mortgage side. And I feel like more people would be so much better off if the agent and the mortgage rep would be really um uh would take the time that this client needs to learn what it is that they're getting into on the real estate side and the mortgage side. So,
Yep. And the one video we did about, escrow shortfalls is
yes.
just another piece of that. Like we want
Yes.
the borrower to know what they can anticipate their taxes doing next year when they reassess, because they just bought the house. And if the people that own that house for 15 years prior, you're going to have a sizable tax increase. And if you're already not stressing about, but you're like, this is the max I want my house payment to be. And now within less than a year, those taxes go up, and now your payment went up even higher. We like to prep them for that as well. We don't want any surprises. There's too many
Exactly.
surprises in this
E
business. Too many.
exactly, and so when you're looking at that rate and you're looking at what you wanna pay per month, so then you're looking at that, "Okay, I wanna be right here," but then the mortgage person should also keep in mind that in a year, are you gonna be at that point? Are you gonna be higher? Where are you gonna be? And to take that
Right.
into account. So,
Right.
um, it bottom line, make sure that the person that you're working with, both on the mortgage side and the real estate side, are educating you. They are spending time with you to educate you about the process, about what's involved, about why you're paying what you're paying, what each line item is on your mortgage side and your real estate side. You've got to be educated. Any last thoughts,
Absolutely.
Mike?
Um, the only last thing I would say is, if you get a quote from a lender and if they send you a loan estimate, if the rate is not locked, you know, there's many instances where some lenders are giving you a loan estimate and they suppress the points off that loan estimate, because if it's not an official loan estimate where the loan's in process and the rate is locked, then the loan estimate or the disclosure has to show the points that you're going to have to pay for that rate. There are ways that those points are being suppressed off loan estimates, and then you find out too late when you have already agreed to work with that lender under false pretenses. You get into the loan process, they lock the rate. Now all of a sudden your updated loan estimate shows $3,500 in points added to your closing costs. I mean, all the stuff going on with NAR and the attack on real estate commissions and all that, yet they're letting lenders get away with this. I don't want to swear, but
Right?
nonsense.
Right?
They let lenders get away with this nonsense, which should put people in jail for doing things like that. Because there's no
Right?
way for the consumer to equally compare apples to apples between lenders. And that's what the
Correct.
government is supposed to be all about, making sure the consumer has apples to apples transparency.
Yep.
So, you know, it's just there's so much to look out for. You don't know that half the answers to the test that the consumers do, that the lenders do. So you can really get taken advantage of
Yep.
by all of these little tricks and things that are hidden and suppressed, and it shouldn't happen.
Yep. All right. So I know sometimes like these videos could be like looked at as downers. I know we talk too much. I know we're not funny people or whatever. But this is serious stuff. When we're working with people, like I said, we really are looking out for our clients wholeheartedly. So we're not, we try to make it somewhat funny and witty, when we can. But in these type of circumstances, this part frustrates us, so it's not funny, and we want to really kind of like hit it home to you that you really need to be um educated by the people that you work with. So learn all you can about the process, and if they're not educating you or answering your questions, right, if they're not answering them, or you feel like they're not answering them good or misleading you or something, then turn the other way and go to somebody else. There's hundreds of thousands of mortgage people and real estate agents out there. You can find whoever it is that you want. And I would ask for recommendations from friends and families, because they have worked with people sometimes multiple times. And so they may have somebody that they know, like, and trust. So,
Yeah,
all right. I think we harped it. I think we beat the dead horse, as they say.
we
So,
beat it.
all
We beat
right.
it. Speaking of horses, we can go back to the zoo commercial.
Yeah.
I want to talk to my agent.
My lines. I can't remember my lines.
How
If
do I
you've
look?
ever
Seriously,
watched,
seriously. How do I look? How do I look?
if you've ever watched the Detroit Zoo commercial, I wish I remember the year. Just go Google or search in YouTube for Detroit Zoo commercial, and I'm sure it'll come right up. And if you have to put like 1980 or something, it's the most hilarious commercial. And anybody who's grown up in the 80s in Detroit and saw that commercial, it almost line for line. And
Almost
so
line
whoever
for line.
created that commercial did a fabulous job, because we always remember it.
No. Every week we do this, we start out, oh, before I hit record, my lines, my lines. What am I going to say?
All right, you guys
Then we have
have
a
a great
mouthful.
holiday. What?
And so then we end up with a mouthful of things to say.
Right, exactly.
So
All right, Mike, have a great Easter. I really
you too.
appreciate your time today, and take care.
Any blessings. Happy Easter.
Thank you. Bye-bye.
We'll see you soon.